Good morning, everyone. This is Mortgage Pros 411. I'm Audrey Boissonou with Kevin Casey, and today we're joined by one of our favorites, Bob Simpson. How are you today, Bob?
Good morning. Doing great.
Well, this is the first time you are coming to us.
To us.
Thank you. From California, you are now California resident. How does that feel?
Oh, Temecula wine country. It's a pretty great part of the world. Really love it. And my kids and grandkids are here, so that makes it even better.
Even better. You know what's
Yeah.
even better about living in California? Has one of the lowest death taxes. So good place to die
Kevin,
in.
what's wrong with you? My God.
Well, lots of people move to like Florida and stuff. They think, oh yeah, I'm going to avoid taxes, and then their heirs get crippled by the inheritance taxes. Like,
Well, I told him before we went on, he was on a tear, a very unfortunate tear. I told him to just pipe down, and here we are. Okay, so speaking of Kevin, reminds me of yesterday when he came up with a number of different titles for today. And I think we've talked about this before. We are terrible at titles for the show. Horrible. Like not kind of bad, but terrible. So these were great, but unusable, most of them. And for some reason, he was fixated on money laundering, Bob, even though we're going to talk about a lot of other things. The 1, 2, 3s of money laundering. Money laundering for first timers, anti money laundering. And that'd be aunties, like your aunt, married to your uncle. Yeah. Who got caught money laundering? How much money do you need to launder to be certified? I'm like, God. Apparently someone's adjusted his medication and he is definitely in a very interesting place. So, with that being said, just to mention that we are part of the Crispin Commentary Group and check out their website because they have a marketplace now and you can find all sorts of services. You can post a job, you can find a job. There's a lot on there along with all the videos from their various shows, including ours. So, moving right along, and completely unrelated to mortgages, but worth noting in my opinion, because I haven't used a stamp in a while. They just had a rate change. Do you know how much a postage stamp costs now? No.
No.
Do you, Kevin? Say no.
no.
Okay. 78 cents. 78 cents to send a letter, and to send a postcard is 61 cents. And just save it if people think that's reasonable. I just think that the price increases are crazy. I mean, yeah. Anyway, it's up 5.
Try mailing something that's not a letter. I went to mail someone a key.
Oh,
Okay.
uh-huh.
And it was close to $6.
What?
Yeah, that was the cheapest I could mail it for.
Holy guacamole. What kind of key was that?
Yeah, just a house key.
Okay.
Yeah.
Well, that's crazy. All right, there you go. There is a lot going on as always. So on Wednesday, that would be tomorrow, we're gonna have existing home sales in a 20-year bond auction. Thursday, we're gonna have new home sales, and Friday, we're gonna have durable goods. And durable goods can move the markets. Also, interesting to note that the next Fed meeting is July 29th and 30th. We are not expecting them to do anything, even though there's a lot of clamor out there for them to lower and to get the Fed fund.
Wait, who's clamoring for this?
Everyone, Kevin, everyone,
I
every
haven't been.
single person.
I think we're just fine. The economy is zipping along. Whoa, where'd you go to? You got a nice picture of your roof. I think you fainted.
You're in rare form today, aren't we? Oh, God.
Pretty good.
All right. So, as we now know, I don't have the most attractive ceiling. I apologize for that. Okay. So, back to the Fed and the clamoring. It is said that we have a restrictive Fed policy, and
Mhm.
that we are 1.25% to 1.5% above neutral, and neutral is estimated to be around 3%. So, the consensus seems to be we are not going to do anything at the next meeting, that maybe in September they will. There are definitely credible people on both sides of that issue on the Fed. And so we'll see what happens, but just know that that is coming next week and it will be something to pay attention to for sure. For sure. I was a little upset yesterday when I heard that Scott Bessent, our Treasury Secretary, said that they are looking at the entire Federal Reserve as a whole says they haven't been very effective. And, it's not that I don't think that maybe some tweaks and changes should be looked at, but I just, the idea of potentially not having a Federal Reserve or having it under another entity of the government scares the crap out of me a little bit. So, thoughts, kids?
I got plenty of them, but
I got plenty of them.
I
Let me chime in.
Okay.
With a lot of commentary, there's a lot more heat than light. And if you're looking for light, I'm always telling my parents, by the way, today I have a daughter in the hospital expecting a child. I should have a new grandbaby in the next 24 hours. So I'm always
Congratulations.
telling my kids there are all kinds of people in this world who want to tell you things.
Right.
It's very, very, very important to get your advice from people whose opinions matter,
That's
because
very
there are a lot of opinions that just don't matter. And unless you can explain Keynesian economics to me, you don't have an opinion about interest rates. You don't have an opinion about the Fed chair. Unless you can talk about Pareto optimality, you are as invalid as strolling into my operation and telling the surgeon how to do my gallbladder. You just don't have an opinion on it. And so if you're going to opine about interest rates, follow somebody. Mohammed El-Arian. What his opinion is my opinion. I don't understand a lot of issues, but he's an expert. So don't get your information or your passions or your light from talk show hosts. They're a bad place.
How
They're
about
a bad place.
how
I
about female basketball players? Caitlin Clark says, "I don't take criticism from anyone. I don't take advice from."
Okay.
Everybody has an opinion.
Yep.
Try to weed out the opinions that don't matter.
It's interesting because when we started doing this show 5.5 years ago, we didn't know anything, honestly. I mean, we were just like, well, I was just a voice in the ether. Nope, I wasn't even on video. And things have evolved since then. But one of the things that has become very clear to us is that projections about what will happen to rates is a fool's errand, because you can have the Fed raise or lower or pause or do whatever, and the projection should be that it will improve rates, make rates worse, mortgage rates, that is. But there could be some other event that happens at the same time.
Mm-hmm.
Great jobs report or a bad jobs report or an invasion of another country. And all of a sudden, all those projections go flying out the window. With that being said, the reason that we pay attention to it is it impacts what we are doing in our lives as loan officers with regard to locking rates, advising borrowers, understanding the headlines that they're seeing and what they think is reality. And the number of folks who have no they so everyone has an opinion. Everyone
Mm-hmm.
does. And they're getting their opinions often from a headline they read, not some in-depth knowledge. And so, again, we are seeing so many people who are offering opinions about what are going to happen with rates. And we had somebody who was telling people a few years ago that rates, after they've gone up, we're going to go back down lower than they'd ever been before. And that, as we know, was a big pile of garbage. And so the fact that they're still out there opining on what rates are going to do is a little scary, honestly. With all that being said, we do have to follow what the Fed is doing to some degree. And again, we'll never know until it happens, but just be aware that this is coming down the pike so that we can act appropriately for our clients and help advise them better.
Let me give you my an opinion, not fact. My opinion is that part of what makes the dollar has been that we have an international reputation of having a Fed policy that's independent of politics,
Mm-hmm.
and that has helped us to be the world currency. It has helped us to have credibility. And what I don't like is people chiming in, not staying in their lane. There are a lot of people that aren't staying in their lane, and that's not done in a vacuum. People pay attention. international investors would be concerned if suddenly our Fed policy were as political as some people think it should be. And that goes at the foundation of what makes the dollar strong. That is my opinion.
It's like those guys that keep claiming that we should go back to the gold standard without realizing the wait, there's not enough gold in the world to cover all the US dollars.
Yeah.
Well, if we controlled gold prices and just jacked it up to cover the amount, then maybe we'd be fine, right? Okay, with all that being said, there is also an argument. So on the one side, you've got, this idea that God help us, the Federal Reserve is not independent. This on the other side is the conversation about whether there is enough dissent in our Federal Reserve and their votes. And so again, who knows? We'll see what happens. But again, next week we get a decision. We'll see what happens with all that. It was interesting because the inflation reports that have come out in the last few weeks were pretty tame. I mean, very much in line with expectations, and didn't move the markets like they sometimes do. So that was kind of a nice change of pace. And in that, we've had a trend lower in the rates, which again, I maintain that I am not living and breathing by what the rates are doing, but it is nice when they head down. I enjoy it too, just like everyone else. And today, the last time I looked, the 10-year was at 4.33, which is considerably lower than it's been lately. So, yay, right? Okay, both of you look very uninterested. Ed.
Well, 4.33 is a nice number. I actually saw that today and I thought, you know what? This seems to be like the median number. When it's 4.33, it's not, rates aren't going up, rates aren't going down. It's kind of like that, the middle spot.
Is that your opinion or a fact,
That's
Kevin?
just an observation that the 4.33 to 33435, that seems to be a nice safe range. When we're going below that, that means grab a rate and lock it. If you're going above it, hold off on locking until it gets back down to 4.33.
Okay, I think you pulled that number out of your tail, but
no, I've been just watching it. Just an observation.
all right. Well, I've got a couple of loan locks, so we'll see. I follow my instincts, and I don't. I don't gamble. But
yeah,
then
4.33 is a safe number to lock at. If you see it under there, race everything you can to get it locked.
Okay, moving right along because this is just okay.
Yeah.
I talk to Bob about a few things, and we're going to start with what is fraud. Let's start there. What is fraud?
All right, so let me drop into my legal background. Fraud has a technical definition, and there are generally 5 parts to it. Fraud is an intentional misrepresentation, and you get somebody to rely on that representation to their detriment and your benefit. Basically, that's it. So there's got to be reasonable reliance. You tell a lie, somebody relies, there's damages that result. So there's an intent element to fraud. Have we intended to deceive you? And when it touches our world, and it touches mortgage and mortgage fraud, that's always the element you're looking for. Not that information was incorrect, but was there an intent to deceive you with that information? I think that's where our war stories get interesting in the mortgage space.
I think that is going to become even more and more interesting based on some of the technological advances that are happening right now and being deployed into our mortgage space. So let's talk about something that you drew my attention to, which is the Pulte, and I'm still not convinced I'm saying this, Palantir project. So there's a company called Palantir Technologies, and the FHFA, or Fannie specifically, it sounded like, I would imagine Freddie's in there somewhere, they are going to be using Palantir. And could you explain to us how that is going to occur and what they are looking for?
Sure. When I first saw Palantir's name, I first saw them within the last year. I got introduced to them and what they do, and what I can tell you is that when you visit their website, you're a little creeped out. And I think they intend to creep you out. Everything from the black background to just descriptions of their services and the things they do that I basically don't understand. Kind of creepy. They have contracts with our largest and most secretive government agencies to get information and use information. They describe their services as we get the right information to the right people so that they can make decisions. And think about this in terms of communications, defense, spy networks, everything. So their gig, it's a Peter Thiel company. It's their thing is data. Not sure how they got introduced to Pulte, but again, they're in with government entities everywhere. So Pulte announces that he and Palantir are going to use this AI to ferret out fraud at the GSEs. So Pulte, we know, Bill, is the self-proclaimed leader of Fannie, Freddie, FHFA, and he's installed himself as senior leadership in those positions. He let go of boards. He's taken an iron fist on the management of the GSEs. And now he announces that Palantir is going to help him ferret out fraud. So I think what caught your attention, Audrey, was the piece I wrote that said, be careful what you ask for, because if you're really using AI to ferret out fraud, you may find out a lot more than you ever wanted to know. And when you find fraud in files, that it's like ripples in a pond. It leaves everybody bobbing in the wake of what you find. If you find that you have, say, a misrepresented occupancy in a property, that is going to affect LTVs and interest rates and investor relations. And maybe you even have to call your HR department because you've got some dishonest internal people. So if you have a book of performing loans and suddenly you find that you have 35 loans with fraud in them, that changes your work week. You now have a different set of priorities than you thought you were going to have this week.
I'd say that's a massive understatement. So let's keep going with this, because this is something that, we've always known that there are checks being done throughout the process. And then after the process, a certain number of loans are audited, etc. But if we have an AI model that's now able to audit everything and it's doing it, I don't know, do you know, is it happening during the process or are they waiting until after the process? I'd imagine both.
Well, if he's talking Fannie Freddie, isn't he talking after the process? Isn't he talking about book loans?
You know what? Thank you. Great point. Yes, probably. But then, okay, as a lender, how do you employ some of this so you can get ahead of it? Because what you don't want is to find out once you've sold a loan to the GSCs.
Yeah, there's
Okay,
fraud in there. Yep.
so listen to, so this is something that Bob wrote. Let's talking about occupancy. It says Palantir will scrape public and private data sources for the myriad of clues left when someone lies about occupancy. For example, they will check rental sites like Airbnb to see if the property is listed there. If a borrower registers a car, a boat, or even a plane at a different address, they'll find that too. It will find the addresses for professional licenses and voter registrations. It will scrub social media to find out where a borrower eats, banks, gets their dry cleaning picked up. Which ATMs does the borrower frequent? Palantir will see if the borrower owns other properties and what the values are of those other properties. It will compare square footage and then search for rental ads for any of the borrower's investment properties. Ideally, Palantir will find and report on electricity usage, trash pickup, the distance to golf courses or beaches. It will run a report on the commute distance between the borrower and the employer. So right now, that's being done by hand at Fannie and Freddie by their fraud investigators. It's going to be so much faster if they're just able to push a button, or maybe just think it. Maybe they don't even need buttons anymore. And all of a sudden, all these checks are happening on the back. I mean, holy smokes. So as an LO, this is something. And again, I have conversations with my borrowers. We talk about properties. I mean, I have a private money deal that just went into contract this morning, and the woman is moving from a much bigger, much nicer place into a smaller place, et cetera, et cetera. And the conversation I had with the investor I'm using is why? Why? Well, I
Right.
knew the
Yeah.
answer to that. I knew why because I talked to her. So in a land of, okay, replace all of us, good luck with all that because we need to know the whys up front. When I hear a C-suite manager talking about how it's a waste of time if you're talking to a borrower taking a loan application, they should just be doing all of that online. And my thing is, yes, you can do loan applications online, but you better have a conversation with your borrower about everything that's on it because that's where those little details that they think nothing of come to light and you're like, "Wait, whoa, whoa.
No.
We're doing
Well,
investment property, and I was thinking we could do non-QM, and you just told me you might move into it in 3 years. Okay, well, if that's the case, then I need to redirect and not do a non-QM loan that will not ever let you live there as a primary residence. And we better look at Fannie Freddie, right? Or some other alternative. So it's those conversations, those personal relationships that are so important. And technology is trying to make them obsolete, but it's also making them more important in this context, I think. What do you think?
You end up with, I've spent 10 years as a loan officer in Southern California. So I've done the loan applications. I've been through this process. I had a borrower lie to me about occupancy. I did cash out on house A and gave this cash to the borrower, and they promptly used that to buy house B and moved into it. So 3-4 months after my loan closes, I get a call saying, "Hey, you lied to us about occupancy." And I said, "I did not lie to you about occupancy. I did a cash out refi. What happened?" "Well, they bought house B and they moved into it."
mhm.
So I got involved with these conversations with my borrower. "Hey, you weren't exactly honest with me about what you were going to do." Kind of creeped me out when I told the lender on house A, "Hey, I didn't do the loan on house B." And the response coldly was, "Yeah, we know." And I was like, "Oh man, you guys have been doing some investigating. All right."
And that was a
So
long time ago, right? This was not recently.
no, no, it was a long time ago.
I mean, yeah, I
And
had
it
some.
created a problem. It created a problem for this borrower because the investor now had a loan that wasn't of investment quality. They wanted the rate up. They wanted the LTV down. The borrower, a 40-year-old woman, had to go to dad to get more money to buy down the LTV on house A. It was a
Wow.
mess. It was a mess. And it just dominated everybody's month. It was like, we have this loan that isn't investment quality, and now we have to fix it. Well, if Palantir is going to get in and find 100,000 of these loans, people who bought their Airbnb lying about occupancy, people who got a VRBO and said they were going to, live in that owner occupied, if we suddenly have 100,000 loans that are found out to be false, you can ignore it, or you got to get a team to fix that. Be careful what you wish for if you think you're just going to use AI to find a bunch of fraud, because I suspect a lot of them are going to be false positives, but a ton of
Mhm.
them aren't going to be.
Right.
Yeah, no,
Exactly.
I had a similar story where I had buyers. It was in the process of the loan, and they did the same thing Audrey said. Hey, explain why you're moving, and the reason was, well, we're buying a bigger house, and that was their story. Well, the appraiser made an error on the departing residence and had it at a larger square footage than it really was. It was actually a house with a separate ADU unit, and when he did the appraisal, he included all the square footage into it and not separating out the square footage of her residence. And so then I got the call saying, "You've committed fraud." And I'm like, you be really careful about throwing accusations about like that. And fortunately, I was able to document it by getting the appraisal corrected and showing no, in fact, they are moving up to a larger home. So it's really interesting.
Yeah, and that goes nicely with my first point, which said
Yeah.
that fraud requires intent, and
Uh-huh.
a goof is not intent.
Nope.
So,
Yeah.
be careful when you throw that fraud word around because it
Yeah.
is loaded. It's not errors, it's
No.
intent to
No.
deceive. Yeah.
Yep.
Well, The other thing too is don't make an assumption that the only reason someone's going to change residences is to make them bigger. A lot of
Yeah.
times will change for a myriad of reasons. And so ask a question before you make an accusation for sure. But if somebody's accusing you of something, certainly know that you know what was your intent. And an intent is going to be very interesting in all this, Bob, I think. I mean, I always think intent is tough to prove, but if you are if you are in this situation, you've got to make sure that you're fighting back because it will put everything in jeopardy for us, right? So, and it may not be correct. So just these are just
If I'd done both loan A and loan B for that borrower, you could have nailed me for intent. You could have said, hey, you did 2 owner occupied loans for this person and you knew that couldn't be real. I mean, you can
Yep.
come at me, but you end up with loan officers faced with this moral dilemma of, do I pass on the second line? You know, it's intent that really matters, and goofs are not fraud.
but
Yeah,
the
I had a coworker who got into trouble where a client came to them. They were going to they made an offer on a house. It was back in the time when they had short sales, and they never heard back on the short sale. So they said, well, since we're not moving and we're going to stay here, let's refinance because rates are better and we'll lower our rate and we'll stay in the cheaper house. So they refinanced, they lower their rate, and lo and behold, 2 months after they close on the refinance, the listing agent on the short sale reaches out to them and said, we're going to accept your offer that you wrote 6 months ago. And so they're like, oh, well, that changes everything. Now we want to move to that house. It's much nicer and we can get it for a cheap price. So they went ahead and they used the same real estate agent or same lender. It's like, hey, now we are going to move. So they did. They got a new loan. So sure enough, boom, all the fraud bells go off because the date on the offer on the contract was from 6 months prior to the refinance and the close of the refinance. And so it just set off all the bells and whistles. And so
I talked to a borrower one time. I talked to the husband, and he said, the weekend after we closed on the house, I found my wife in bed with a guy. He goes, when I closed on that house, I was going to live there. I
yeah,
was going to live there. And 5 days later, he's packed a bag and he's gone. You
yeah,
can't, a lot of things happen there, but one of them is not occupancy fraud. The guy
yeah.
intended to move in
Uh-huh.
and he's gone.
Yeah.
He's gone. So things happen. The date you close, you have to have an intent to live there, right?
Yeah.
That's the intent. But stuff
Absolutely.
happens. Jobs get lost.
Uh-huh.
You find your wife doing in flagrante delicto. You find something, and plans change. So
I think too, I just had a borrower this week who was going to do a cash out refinance and then decided they are going to move out of state instead and sell their house. And asked me, they said, well, so can we still do the refinance? And so we can do the home improvements we want to do. And I said no. And it's interesting because I have asked this question of reps before and been told, well, they're living there now, so it's owner occupied. I don't believe that if you know ahead of time that you're going to move out of state and pay it off, I don't think anyway, there are some really gray areas in my opinion, and sometimes we get very interesting answers when we ask the questions of reps and of underwriters, et cetera. How do I handle this? And so I mean, at that point, I think I would just document the crap out of every conversation. For me, I'm not doing that loan as owner occupied, and it's not rental. So this takes us to that scenario, Bob, that you and I were talking about earlier, which is there's somebody who has a place on each coast, right? So one in California, let's say, and one on the East Coast. And actually, I think there is a case right now that we were talking about, right? It was a politician who's been
yeah, there was an allegation. Let's just throw politics right into a otherwise peaceful conversation. Let's just lob it right in there.
I mean, what could go
Some allegation that Adam Schiff committed occupancy fraud. So let's examine that just a second. Let's say I'm the loan officer. I get a guy who comes to me, he goes, I have 2 properties, California and just outside of Washington. And I say, okay. And he said, I spend this much of the year there, and I spend this much of the year there. I say, okay. Any one of them a rental? No, I don't get rent on any of them. Not even short-term rent. No, they're my homes. I live, kind of both places. I
Yep.
buy coastal employment. I'd be sitting there as a loan officer, and I'd be going, well, hell, that's not a rental. There's no rental income I'm counting anywhere. You can have owner occupied, and you can have a secondary residence. If I'm doing the loan for that guy, I'm definitely not putting him into a non-owner loan. I'm not doing
Right.
it. And
Yeah.
and so it goes back to our first point, intent. If I'm a loan officer taking that loan app, I definitely don't go rental. I definitely don't go non-owner.
Right.
So it gets back to this gray issue that you're talking about, which is absolutely right. Sometimes as a loan officer, you're looking at things going, well, that's a close call. You might call your underwriters and go, what do you feel good with? How should we price this, or what should we do with the loan? Believe me, I'm not excusing anybody's misreps. I've spent my career landing on people who misrep loans, and the problems those loans cause have been the reason I've had a career. So I'm not trying to give anybody a pass. I'm trying to look at this from a loan officer's perspective. Our audience here today, a lot of loan officers, when somebody comes to you with that bi-coastal employment, what questions are you going to ask? How much time do you spend here and there? Does
Yep.
it matter? Does it even matter if you are taking that application on the week or month or the season of the year in which he's in the DC property? I don't know. Does it?
Yeah.
Does it? I don't even
It's
know
great.
that matters. But these are the questions. This is what our loan officers get faced with when they're trying to originate honest loans. They're trying to do their jobs, but sometimes situations are complicated. Maybe deep inside of Fannie Freddie manual somewhere, there's a rule on that. I don't know what the rule is.
So I was talking about on 3 separate occasions in my career, I've done loans for husband and wives who live either next door to each other, in a different town, whatever, from their spouse, but they're still married. So I've been told we want to stay married, but we can't live together. And I've done owner occupied loans on both residences, but fully transparent to the lender when I go in. And I mean, I had to document the crap
So
out.
you do it for the husband as second home and for the wife as primary?
Oh, it was literally they were both primary residences because the husband was living in one as a primary residence, the wife was living in another as a primary residence. They were qualifying together. I had to show that the utility bills, their driver's license, like I had to document that they were both primary, but I was allowed to do this. Now it's been a while, and I'm wondering today, like things change. So again, back to a previous conversation where somebody's being accused of mortgage fraud from 30 years ago, we've got a whole different world that we're in today than we were 30 years ago. It's just a fact. And so it's very difficult to compare apples to apples when you're talking about that kind of time period stretch. But within today's confines, I mean, I would just go in, I would document everything. I would have letters of explanation stating that you are disclosing everything in the file. And then if the lender is making a determination with all that information, then I would think that that would save you from being accused of anything because you're not misrepresenting anything. What are your thoughts on that?
When we investigate a fraud file, when we're in there, we want to see a representation that was false, right? A representation, and in a mortgage sense, that is your signed 1003. I don't care. Oh, I do care. I look at it, but what's on the first 1003, the second 1003, the third one, they get revised. Somebody says I make $11,000 a month self-employment, and then the underwriter looks at it and says, no, you don't. You make $8,200 a month because
Right.
they've looked at everything. So that last 1003 as you're closing is different than your first 1003. Does that mean you were lying to me when you said you made $11,000 a month? It absolutely does not. Okay. So what you're looking for is intent. It doesn't matter if there's a change from that first 1003 to the last. What we would look at is we look at it and we go, oh, yeah, the underwriter came up with $8,200 a month, but those Schedule C's, it was all bullshit. There was not, it was all made up. There was no even business there. That's fraud. So what you're looking for is not errors, not underwriting disagreements. Oh, we have husband and wife. Let me point out something about what you just said. You did owner occupied for a husband and wife in 2 separate properties. Notice that what the concern is about owner occupancy. What's the concern? The concern is that people don't bail on owner occupied homes the way they do on rentals. They don't get out, they don't leave the keys off, they maintain them, there's less deferred maintenance, they take better care of them. You did owner occupied for a husband and wife. They're not going to bail, they're going to maintain them. Everything that underlies the rationale to give preferred rates to owner occupied properties pertains to those 2 loans you did. So you did 2 loans, I think, in the spirit, no matter if somebody's got some underwriting reg somewhere that's going to disagree with me here, you did 2 loans that jive with the underlying concerns of why you like owner occupied loans, right?
Yep.
Defensible. I think that's defensible.
I want to move on to the next part of our friends at Palantir's objectives, which are to look at assets. They're ultimately you're looking for money laundering, right? Excuse me, but also to make sure that someone isn't misrepresenting assets. So I mean, you're okay, and we should have started with this. So you were a loan officer for 10 years, you have a law degree, and you have spent most of your career, a big chunk of your career, working on fraud cases. Is that correct?
Yes, I ran the largest mortgage fraud investigation company in the country called IMARC. We worked largely for the mortgage insurance companies, and now I teach BSA AML compliance, and I do BSA audits. That's what I do for people now, and specialize in the mortgage industry. So I'm less interested in gold dealers and art galleries. I do these audits for people in the mortgage space and teach it. So this business of checking assets, we don't think many times in the mortgage industry that money laundering applies to us. We're like, what do you mean money laundering? We make home loans, but you have to understand that real estate is maybe the #1 way that people launder dirty money throughout the world. And so, yeah, okay, but we're doing mortgages. It doesn't matter. You're touching real estate. You're touching the potential for somebody to be laundering that cash through you. Do you know where your cash out goes? If you give cash out to a borrower, do you know who's getting that cash? And the response from 7 out of 10 mortgage lenders is, I don't care. They wasn't a bogus second. It was there and we paid it off. But are you checking to see if it's Pablo Escobar or his relatives? Are you understanding where your money goes? And I think that's one of the things that we underestimate in the mortgage industry is how prevalent money laundering is with our funds, with our properties. We send so much money around the world, through the mortgage industry. There's so much money here. And there are ways that the crooks have found to launder their cash through your loans and your real estate.
Yeah.
So this is something that they are looking at. Like if you're paying off a second, who is getting that money? So back to your article, there is so much more that Palantir's data is going to do, so much more than just validating that a document is valid. It should analyze account balances with borrower profiles, check seasoning of funds and geographic red flags, automatically verify the grantors of gifts are related to the borrower as required by gift letters, and bump the names of grantors up to the SDN list. So just remind everyone what the SDN list is.
SDN list is specially designated nationals and blocked persons, and it is a list maintained within the Financial Crimes Enforcement Network within the Treasury Department. Last report I saw ran to about 2,200 pages, and it's a Russian who's who, North Korean who's who, of people you can't do business with. Actually, people, countries, and oddly, vessels, ships you can't have in your harbor. And so my point in writing that was that if Palantir is really using their technology, they're going to make sure that, yeah, that grantor of the gift is really related to the borrower. I saw a file come in with $100,000 worth of gifts, but from like 8 different people. And they were all of different nationalities. It just stunk. It was like, those aren't your relatives. I mean, they were different nationalities,
Wow.
foreign bank accounts. It was like, no, those aren't your relatives. I'm just guessing here. But Palantir should be able to check all that automatically and see if any of those bank accounts were used. Can you imagine the power to see if any bank account used for a gift was used in any other Fannie Freddie loan?
Ooh, interesting.
Oh my God. I mean, the
Yeah.
power of that
Yes.
is like, oh no, this one account was used in 8 different names and 5 different trans. The power of using AI to ferret out bad money coming in through gifts is huge. That's not a check that we make. We're satisfied if we source the funds and if we take the gift letter that says no obligation to repay, and I'm a blood relative. We don't trust any loan officer or borrower to write that letter competently themselves. So we always give a form. There's always a form. It's just fill in the blanks because we don't trust anybody to write that. They're going to be able to check and see where the gift funds truly come from, which could be powerful, and it's something we're not doing right now.
I mean, we do it in the sense that they track to make sure that the account number on a gift letter, it matches with the account number that arrives showing where the wire came from in escrow. But yeah, I mean, again, I think that kind of thing I'm totally fine with. Like that is, to me, that doesn't scare me just because, again, I'm having conversations with my borrowers. I have somebody right now who's getting a large gift on a transaction. I've known their parent for literally a decade and a half. You know what I mean? I know
Mhm.
that he got the money. I know, like, if we know our borrowers, if we have some relationship or some connection, then it's going to be less likely that there's some shenanigans going on than if you are dealing with someone who just fell out of the sky.
Yeah. How about that case, Audrey, we had where the it was a fraud on someone filled out the STAR report, and it turned out there was a terrorist organization behind the transaction. Do you remember we were talking about this at camp last week? And I think it was the FBI agent talked about it, how, hey, you fill out the stupid SAR report. Oh my God, I got to fill out this report because this little thing didn't seem quite right. And sure enough, some loan officer ended up stopping this huge terrorist campaign.
Oh, that's crazy. Yeah, I don't remember that. My goodness. Yeah,
Yeah.
there are what's interesting to me is so the Bank Secrecy Act that we always cover when we're teaching NMLS every year, and I would imagine, every loan officer has heard that whole thing a million times and may or may not really understand why it matters, what they're looking for, why do I have to do this? I remember the first time I took that course in when was it, 2012? And it was such a foreign concept to me. I had no idea. And I'm like, what am I supposed to do? Like, that's not part of my life. And as the years have gone by and we become more and more aware of what's happening within the mortgage space, those tools do become more valuable, right? So, okay. So, what's the most common thing that you're seeing out there as far as fraud goes, Bob, that we should be looking for?
Occupancy.
It's all,
Occupancy fraud is probably 2 to 1 over anything else.
wow.
It's very common. It is not viewed as serious by the general public.
Mm-hmm.
It's
It
a
used to not
white
be
lie.
considered, yeah, used to not be considered even by the FBI. I remember going to a conference 20 years ago, the FBI agent saying, oh, there's 2 types of fraud. There's fraud for income and fraud for occupancy. And we really don't care about fraud for occupancy. They literally said that.
Yeah, and
But today they do.
um, there are times when occupancy fraud is really a big problem. Like, what if you find out that your borrower doesn't live there, and then when you do the property inspection, it's a marijuana grow house?
Yep.
I mean, I've seen the pictures. I haven't been individually to grow houses, but I've seen the appraisal reports that come back, and it's just, every room, the attics,
Yep.
everything's stuffed full of lights and weed.
Yeah.
Your house is being used for a criminal enterprise, and you did an owner occupied loan on that house. So there are times where it's terrible fraud. There's times where it hardly matters at all. And then there's, I frankly, I think our markets have been affected by owner occupied misrepresentation for the number of people that own Airbnbs and VRBOs. I that's an opinion without a lot of facts. Let me say that I don't have a lot of facts on that, but I just think a lot of people bought properties and just said, I'm going to live there, and they've got a VRBO. It's my own.
Well, they most likely would do it as a second home, I would say.
Yep. Yeah.
And also, a lot of people do it where they're renting out part of the time and then they're in it part of the time. So I don't know. I mean, read your
That's a hard call. Yeah. So what if I'm buying a second home, but then I decide, wait, I can Airbnb this thing and I can make some really good money for when I'm not there.
I've done file reviews where I would look at a file and I've got closing date on day 1, and on day 3 I'll see it listed on Airbnb.
Oh,
it's just like, no, everybody knows what happened there, right?
Wow.
Wow.
When we think about this, there are a lot of rich people that try and say they live in Nevada, and they don't, because you've been to Vegas, right? And they try and say that they've been there. Well, California has a tax squad of people who do nothing other than try and find out the liars and the people who say they live in Nevada when they really don't, because you get out of the California taxes, right?
Yeah. And they catch you.
And can you imagine if Palantir just contracts with the state of California to go, we got you. We'll run everybody who says they moved to Nevada through our system, and we're going to find out every ATM transaction that they accessed, and most of them come from Westlake Village. I mean, it's just like, I mean, the power of auditing through AI, it's astounding what can happen.
So I don't know if they would have access, though, to the bank transactions without a warrant.
I agree with you entirely, and I have never been more unsure of somebody's opinion than that one.
Yeah.
It seems to me they're getting everything they want.
Because I know for a fact they use cell phone. They track and see your cell phone usage, and they will see how much time your cell phone is in California versus in another state.
Yep.
But the same thing is like, well, how do they get that documentation unless you've accused me of fraud and got a warrant to track that? How do you get access to that document?
You see our guy who got caught at the Coldplay concert canoodling with his his executive
head. Yeah.
If you don't want to get caught, don't canoodle. It's we're living in an age quickly where it's not possible to deny the paper trail behind you. They know the cell phone towers that you ping. They can track a lot of things, and I think that I'm generally in favor of steps to make sure that we have investment quality loans. I think I'm generally in favor of that.
Yeah.
But I know that there's some lines we're going to overstep here.
I think that it reminds me a little bit of driving in the UK. Excuse me. When you're driving in the UK, there are speed cameras everywhere, and they do something called speed averaging. So they're watching you at this point. How long does it take you to get to the next point? And they're averaging your speed to figure out. And then they just mail you a ticket, which like,
they also use cameras if you park illegally in a construction zone like I did, and you get a check for a bill for $400, even though there was no construction going on, and I needed to pull over somewhere safe, and that was the safest place to pull over. And yeah, $400 later, or 400 pounds actually.
Well, now that's making me wonder, because I pulled over in a bus for a few minutes waiting for a relative to catch up behind me. Now I'm wondering if there's some camera that captured that. My point is,
there is in San Francisco. Don't do that in San Francisco.
I feel like there should be some fair, okay, so again, this is not the first time we've talked about my driving habits, but like, it should at least be fair. Like, you should have to catch me, and cameras everywhere. And so this is I don't know. I'm so on the fence on this because I believe in doing like the right thing in loans 100%. I really do. But it also I don't love the idea of them having full access to all my ATM records and all of my, publication subscriptions and every other private I have no privacy left. And again, back to England where I had a conversation with some people and a lot of things, I mean, very little cash is happening in England. They really want you and the EU, I if I
Mhm. Yeah, that's because in the United States, vendors, all sales are required to accept cash. In the UK, that's not the case.
So they're able to track everything. And
Yeah.
again, there's part of me that wants to be private sometimes. I don't want everyone to know every little thing I've ever done. And so I don't know how everyone else feels, but where's the balance? I don't have an answer because and I think it's different for all of us. Like we'll all have different answers to where that line is, but there, how much do we want to be overseen and I don't know. Like I'm all over the map on this. Okay, I just wanted to quickly cover housing starts because they're falling. And the best way to do this, I decided this week was to quote our friend Dr. Elliot Eisenberg. Housing starts continued falling in June, dropping 5/10 year over year from 624's already depressed level and are at their worst June level outside of COVID since 2019. Making matters worse, single family activity fell 4.6% month over month after falling 2.3% in May and is down 10% year over year. This matters because single family starts contribute much more to GDP and employment than multifamily starts due to single family units being significantly larger and costing more, excluding land. So, the other part of this that's important is when we have housing starts that are down, that means that our future construction is going to probably be less than it should be. And with housing formations averaging 1.8 million uh, per year over the last 5 years, and if we're only building somewhere in the neighborhood of 1.3 million new places, that's going to be an issue as far as demand goes or supply.
Home values would rise.
It will support supply. I mean, it will support the demand, the cost, the prices. What the hell's wrong with me? It'll support prices, but again, we're not going to have enough houses for everyone. So for those who are waiting for the sky to fall and to have some sort of disaster in housing, so far we're not seeing signs of that. So it's just something to chew on this week as we are looking for loans and knowing they exist. I've got people going in contract. Kevin's got deals going. We both have refis. There is activity out there. And the numbers I was seeing out of MBA for Q2, Q1,
Mhm.
I mean, we're closing a lot of refinances. It's happening. So this idea that they're not happening is a complete fallacy. So there's no excuse for not doing business right now. We just have to go get it. It's different than it was in the past. This is not a market for people who just sit by idly and hope that it will just appear. This is a market to go old school, employ things that used to work. I mean, trigger leads were just banned. So if you can't go buy a bunch of leads now, what are you gonna have to do? You're gonna have to go old school.
Have the trigger leads been banned?
Didn't they pass it in Congress, Kevin?
Yeah, but it hasn't been signed yet, as far as I know.
I think, well, why wouldn't it have been
Yeah,
signed? Really not.
I don't know. I have not heard. I was
Hmm,
like, you might know something I don't know. Do you have a direct line to Trump that you can call maybe and find out?
Weirdly, no. But I do have a direct line to a few other people who absolutely know the answer to that. So I'll double check on that. That's interesting because, yeah, you're right. I haven't heard that it
I
was
have not heard about the big, beautiful bill or trigger lead bill being signed.
the
Hmm.
big bill got signed.
Yeah. I know, yeah, the big one got signed, but I haven't heard the big trigger leads
Yeah,
bill.
the
Hey,
most.
Bob, while we only a couple more minutes here, want to chat with you about red flags. Um, and so I was on a expert witness on a court trial for fraud. And in the during the deposition with the attorneys, they're going back and forth about why did I feel that this loan was, fraudulent, because there was no one thing that was like, oh my God, there's thing, but it was the level of red flags that were involved in this file were to me off the chart. It was like Like every time I looked at something, oh, there's another red flag. Oh, there's another red flag. There's another red flag. And while none of them by themselves meant there was fraud, when I saw the level, and they said, well, why do you feel that this file was, there was fraud in this file? I'm like, it was the level of red flags. I've never seen so many in my life. It's just like, yeah, red flag doesn't mean there was fraud. It means, oh, this is odd. There's something weird about this. And so, that was kind of how the case ended up settling, was that there was fraud, and it was driven by the loan officer, not by the borrower itself. Even though they're like, hey, this borrower has done 7 loans before. How do you know that they aren't committing fraud? And it was just like, no, because there's things borrowers know, and there's things loan officers know. And, loan officers know a lot of stuff. It's one of the reasons why loan officers can't do their own loans. So
So Bob, what are the red flags you look for? The most common.
Well, red flags are silo specific. There's employment red flags. There's occupancy red flags, asset red flags.
you
I
got
took
all
a
of those.
yeah, I took and you see them sometimes, and you just have to address them. I took a loan application from a young woman, 25, 26 years old, and I said, "What do you make?" She said, $400,000 a year. What the hell do you do? She was an office manager. I got, that's a red flag. Tell me about the business. It was her dad's printing company, and he had 4 or 5 kids working for him, and they were all making that kind of money. My own father was 80 years old and working as a judge in Los Angeles, and drove himself to work every day. That's a red flag. You mean this old codger drives himself to work every day? Every day? Really? He's 80. Yep. It's a red flag. You check it out, and you check it out. Notice that you're checking it out based on something you can't underwrite on, age discrimination. You're looking at the old guy and going, is that true? But
Okay.
if your job is a red flag identifier, it's not the same thing as being an underwriter. I would expect my father to have been able to get any loan he wanted, but the red flag reviewer should have said, wait a minute, is that real? The wait a minute, is that real is your red flag. And your job is to then check it and make sure that there's a story that works behind it. With my young woman who was making serious bank working for her dad, okay. And when I asked her, where's your down payment coming from? What are you selling your current condo for? She goes, no, I'm keeping it. It's my money. I'm going to buy this new house. It's unusual. It's a red flag. And sophisticated people, Audrey, Kevin, you guys taking loan applications, you know to ask that follow-up question, because my underwriter is going to ask, why is this true? That's how you handle those things. And if you don't get a good response, then you can elevate it maybe for a SAR filing. You can elevate it for something, a denial, if you're not getting an honest response out of something. But they're very silo specific.
I would like to say that I was recently having a conversation with someone who was lamenting the fact that their 80-something-year-old mother was still driving to work every day from up, I don't know, somewhere in Sacramento down to Danville every day and back. And she was fine. And also, just to defend the 80-something-year-olds, my 87-year-old father drives from Corvallis, Oregon, down to see me in the Bay Area. I drag him
God bless him.
and then he drives home. And so again, Bob, do not discriminate against people because you think they're too old. Okay, that is. I
understand. I apologize for offending anyone over 80.
I know, terrible, terrible. I just want to say thank you to Deborah. Sorry, Gaveglio. Good Lord, sorry about that too. She has verified trigger lead bill has not been signed. It passed the House but stalled in the Senate due to a similar bill needs to be reconciled between the two. So good God, that has not passed. Holy, thank you, Deborah. That's ridiculous.
I know. I've still had my clients opt out and waiting 5 days before I pull their credit.
Here we go.
Drives me crazy.
Oh my God, that is so annoying. I mean, so annoying. Okay, also we're past time. I apologize for that. I'm just gonna end this with a big I'm sorry and there are loans to do, but for God's sake, ask a lot of questions. Make sure you're verifying the crap out of everything and do them on the up and up. And I am just really straightforward with my borrowers about fraud realtors, I tell them too, because sometimes they're the ones who are pushing, oh, just go to this other LO, they'll do it. Don't let that happen, or do your best.
At the best case scenario, you lose your license.
Okay, and as a celebration for my pending granddaughter's birth, anybody listening to this podcast today, I've got a course on red flag management. If you want it, I'll send it to you for free.
Oh, that's so nice. And I just want a big thank you to your daughter for not having that grandbaby right in the middle of our show. Just 2 minutes before.
Can I just say she's 9 days overdue and she's driving the whole family crazy?
Good luck with that.
It was
Congratulations.
till after our show. So congratulations to you and
Thank you.
and everyone. Have a wonderful week. There are lots of loans to close. Go find them. All right. Kisses.
Thanks, everybody.
You guys.